Boris Schlossberg, Managing Director at BK Asset Management.
BK Asset Management's Kathy Lien.
Good morning, everyone. How are you? Welcome to our weekly market outlook. There is so much to talk about. I'm Kathy, and I'd like to start with a sound check. Before we kick in, I'm going to set some stuff up on my end to make sure that I can see all of your questions. So, let me know, and if you're a BK member, let me know in our chat room that you can hear me, or you can let me know right here. Oh, right. Thank you, Cheryl. Thank you, Another Mutant, Douglas Foster, David, everyone who's here, ready to talk about what's to be expected in the markets. All right. Now, my question is, before we get started, how many of you, let me frame myself properly, how many of you actually thought that the tariffs were going to happen, that they were actually going to be signed into executive order and not kicked down the road? If you say yes, that means that you actually think, you actually thought that the tariffs were going to be assigned into it's passed. If you said no, that means you were still skeptical. Hola, Ephraim from Mexico. Okay, so most of you thought that he was pretty serious about it. So now the question is, did the market reaction make sense to you? Because we had talked a lot about this in the past couple of weeks, and we talked a lot about how if the tariffs were going to happen and they were going to be announced, that we would see a significant sell-off in the stock market. We would see a sell-off in currencies. We would see the yen rise. Did that move make sense to you? Wonderful. I love how, all of you are beginning to learn how to interpret fundamentals, how to read fundamentals. Here is the biggest question, and I'm going to put an emoji up here before I'm going to look at my thing. Let me find I need to find the right emoji here. Hold on. My question is going to be, how many of you, and I'm just going to take a second to figure it. If I can't find this emoji, it's no big deal. I'll use an alternate emoji. Yeah, I can't seem to find it. All right. How many of you were confused by the lack of continuation in the markets? How many of you, where's my confused emoji? Can't seem to find it, or my mind's blown. We'll just go with this. How many of you, how many of your minds were blown when there was no continuation after the initial move? I think that's the most important thing to talk about, which is, why did the market suddenly sell off and not continue to sell off? I think that's what many of you are coming here to try to get the answer to, which is why was there a pause in the markets? Now there's a huge gap in the markets. Does this mean the gaps will be closed? What should I do? Should I take this opportunity as an opportunity to sell on this bounce? Should I, basically buy, looking for the gap to be filled? I mean, I'm sure many of you are wondering this question. And I think that's the most important question to ask, regardless of what the data will be, all the important data this week, like non-farm payrolls, the Bank of England's rate decision. The only question that we should be asking, and let me see if I can get my screen share working here. Where is my screen share? Okay, add to stage. This is Euro, but let's look at the Dow futures. Will this gap be filled? Let's get rid of my lines. Will this gap be filled? Is this bounce in the euro dollar an attempt to fill the gap, or is it an opportunity to sell at higher levels? What's going on? Just like BGP said, came here today to get some clarity on what's going on. And I think that another mutant makes one of the best comments. I'm not wondering, just waiting, because I have learned to expect nothing. And in many ways, this is the reality of life under the Trump presidency, which is that we don't know what he will do next. And I think that the price action you see here is a reflection of that. So let's kind of think this through. So no surprise, euro stocks, either chart you put up shows a huge gap down at the Sunday market open, which is exactly what you would expect. And, this is true of pretty much all major announcements, small major event risks, all big surprises. And what's true of that is that there will always be a little bit of continuation. Usually in the first 2 hours, there's usually a little bit of continuation. It doesn't stop immediately right after the drop in the Asia Open. Because if you think about it, the Asia Open is at 5 p.m. New York time. So most people are still sleeping in Asia at 5 p.m. New York time. So they come in at 6:30 if they get up early and they know it's an important day, or they come in at 7 if they are coming in a little later. They come in and there is continuation. And, with BOJ intervention, with surprise rate hikes, with a lot of surprise tweets that we used to have in Trump's term, this is the price action we would oftentimes expect, which is a gap followed by maybe 2 hours of continuation. And then, depending upon how the market interprets it, either consolidation or a further decline. So what happened, and I think some of you probably are aware, is that we had the tariffs announced. Canada hit back. They were pretty swift with this. They came out and, I wouldn't say too swift because, they were announced on Saturday. The markets didn't really open until Sunday, so they had a full day. It wasn't as if they came out, an hour later. So by this time, by the Sunday market open, the market already no one knew what the tariffs were. They already knew that Canada responded with retaliation. But, as the Asia recession progressed, one of the things that did not happen was Mexico did not come back and retaliate. And China simply said that they're considering their options. And that one of the interesting things, which we'll talk about, whether it's true or not, is that they said that they weren't going to weaken the yuan to offset this. So China and Mexico did not follow up with additional retaliatory moves. And then Trump later on in the evening said that he was going to have a phone call with Mexico and Canada this morning, or I don't know exactly what time. I think maybe 10 a.m. or something like that. So now there's hope. There's hope that this is all but nothing more than a negotiation ploy by President Trump. Because, yes, he said the tariffs are signed into executive order. However, they won't take place until February 4th. So we've got a couple days. And so those couple of days is the opportunity to make a deal, right? I mean, President Trump loves to make a deal. Now, the question is, number one, will Canada, who is royally pissed off, accept the deal? Because, they've already hit back with tariffs. This morning, Ontario said that they're going to cancel all contracts with U.S. companies, which is a direct attack on Starlink, the internet provider. Maybe is it February 4th? I'm pretty sure it's February 4th. Or maybe it's February 5th. I have to look back. But either way, the conversation is happening today. And so, Ontario said they're going to cancel their conversation, their contracts with, U.S. firms, which, basically includes Starlink, Tesla, Elon Musk, firm. And so they are royally pissed. And they may not back down easily. They even told Canadians not to travel to the U.S. on vacation, in retaliation. So I'm not sure whether or not they're going to back down easily. Now, of course, this could all be a farce, meaning that Trump could claim he made a deal and Canada is promised to do XYZ, and then Canada doesn't really do XYZ, and it's all about, perception. If all of that is what happens, and after the call, Trump says we had a really good conversation, and he suggests that they may give them more time to I guess make headway in his demands on fentanyl and whatever else that he wants. That would really make the market happy. That would satisfy the market, and this gap could be filled quickly. Now, of course, the best case scenario is that we had a fantastic call. They agreed to a million of things that we asked for, and so we don't need to do this right now. We're going to wait. We're going to give them time because we're going to be good neighbors. We're going to be good friends. If that is the case, then these gaps will be filled. So one of the really fantastic questions that we had asked by BGP is, does the gap ever get closed on the same day? Yes. Sunday gaps can oftentimes be closed on the same day. Now, of course, it depends what drives the Sunday gap, right? Is it something that is temporary, or is it something that is permanent? And unfortunately, with this time around, we don't, it's all up to what Trump wants to say. We don't know if it's going to be temporary or permanent. I plus the currency market is hoping that it's just a negotiation ploy. The stock market is definitely a little bit more skeptical. You can see from the stock market that, yes, we had a sell-off. There was no continuation. And we didn't see, further losses, but it's not looking like the Eurodollar chart where we are like up here on the Eurodollar chart. We're much lower. And so, currencies are a little bit more, stocks, equity traders are a little bit more skeptical. Treasury yields are down. Treasury yields are down, but they're not down that much. Gold, where's my gold? Gold is, it basically, what's interesting about this is that gold shot down on US dollar strength. And gold, is aiming, there was no gaps in gold. It's aiming back because, gold was trading continuously. It's aiming back towards its highs. And, that tells us that gold traders, as well as stock traders, are skeptical. U.S. Treasury yields, bond traders, it's neither here nor there. Nothing really happened. It's just been a tight consolidation because bond traders, are trying to figure out what it all means for interest rates and monetary policy, which we'll also talk about. So you have one market, which is the currency market. And, we also to some degree see that in dollar CAD. The currency market is hopeful. The currency market is hopeful that a deal will be made, whereas the stock market and the gold market is not. So clearly someone's going to be wrong. Clearly someone is misinterpreting this. And I think most certainly the currency traders and the currency market will be surprised. So, as Ephraim is pointing out, Mexico is handling a different way. China is handling a different way, which is basically not really saying anything yet, and trying to see, what this China does not have a conversation with Trump today, or at least not this morning. I don't know if they're going to talk tonight, but Mexico is clearly waiting to see how this conversation plays out before deciding whether or not they are going to hit back with tariffs. So as traders, let's get back to talking about what it means. So first off, so now, does this make sense for those of you, ask the questions about was totally confused about why there's no continuation. If this makes more sense, give me a thumbs up. Let me know that you have a better understanding about why there hasn't been continuation, and instead we're seeing the gaps starting to be filled in currencies. All right. I'm glad BGP has a better understanding and asks, the really good question about whether gaps are closed on the same day. And I have to say, I've oftentimes seen gaps closed on the same day. And when we've got such a big event like the call between Canada and Mexico, if we get a headline out of it, a positive headline could definitely fill the gap. And if you think about it, like, let's think about this in the world of currencies. This gap is 80 pips. This gap, a little less than 80 pips. 80 pip gap is not that big. It's not like we have a 200 pip gap to fill. This is an 80 pip gap. So 80 pip gap in euro dollar is not that big. We can fill it. It won't be too hard. And then the gaps in some of the other currencies are already smaller. In dollar yen, it's definitely can get the gaps. My point is that the gaps, even in dollar CAD, how far are we from the gap? Attempted to fill it last night, 146.70. The dollar CAD gap is definitely a little bigger. It's about 120 pip gap. But dollar CAD has certainly has more volatility and can certainly fill it these days. So my point is the gap is not that big. And so the gap certainly can be filled in one day. We've seen this move off of just a non-farm payrolls report. So it all depends on what Trump says after his call with Canada and Mexico. So what does this all mean in terms of interest rates? What does this mean for the Federal Reserve? What does this mean for monetary policy? Let's see first if our CME Fed Fund futures have changed at all. So a day ago, let's just look at the market was pricing in. A day ago, it has not changed much, but let's look at a week ago, okay? A week ago, the market was pricing in about a 33% chance of a rate cut in March. We're not going to really look at March right now, but let's look at December, which is how many rate cuts are priced in this year and how have they changed? Okay, so right now rates are at 4.25% to 4.5%. So the market is basically pricing in one pretty close to one full interest rate cut this year. And so the Fed is predicting 2 interest rate cuts. The market is pricing in 1 full interest rate cut this year. And how has this changed from the last meeting? Well, has it changed from a week ago? It looks like the market is now pricing in a greater chance of a smaller chance of a rate cut by the end of the year because these were basically pinching pennies here. It's 8.3% to 14%. But what I'm interested in is what does the summer look like? June. So let's just click to July. So the market is pricing in basically about a 70% chance of an interest rate cut in July. And they have interpreted the tariffs. And once again, we all know these can change a lot. They have interpreted the tariffs to mean a smaller chance of a rate cut. I actually kind of find that interesting. So, tariffs are definitely inflationary. We already seen some U.S. company, as I posted on my Twitter feed, some energy company basically say that they are increasing the propane cost by 25% because of the tariffs and passing it on. I guarantee you we're going to see either higher prices by many American firms and many American companies. We're going to see higher prices in the grocery stores. We're going to see higher prices in the energy bills. We're going to see higher prices in autos. So we're going to see higher prices. And so those higher prices are going to cause Americans to cut back. I mean, if everyone's paying 25% more for most of their things, they're going to spend less, especially if the markets are falling. So it's interesting that the market thinks that the inflation impact is more significant than the potential recession impact. We'll have to see. I don't know, but that's currently the interpretation. I think personally that I think the tariffs make it more likely for central banks to cut interest rates because inflation has already moved down towards their target. and their focus could now shift to concerns about growth. And that is why this week, the Bank of England is definitely expected to cut interest rates by 25 basis points. They're definitely expected to cut interest rates by 25 basis points. And that's why I am bearish the British pound. So, I am bullish US dollars. And I'm bullish US dollars because all of this is, first of all, the tariffs. And we talked a lot about this. We talked about how the tariffs are pro-dollar because it's protectionism. It makes, people for multiple perspectives. One is protectionism. One is just, people, traders getting nervous and seeking the safety of US dollars. So that's what we've seen. That's what we expect to continue to see, which is that the tariffs are, if they remain and they don't get pulled back, they're positive for the dollar. Non-farm payrolls is due this week, along with manufacturing and service sector activity. If those numbers end up being weaker, then those numbers could definitely drive down the dollar, especially the jobs report, because the jobs report is expected to show slower job growth. But it's not necessarily going to be the case because the tariffs, the thing that matters most are the tariffs and what comes out of it. And that will affect how people interpret non-farm payrolls. Now, BK traders, we're going to be talking throughout the course of the week. So we'll be talking about that. And for all the rest of you, we'll be live trading non-farm payrolls on Friday. So before the non-farm payrolls happens, we'll be talking about what the game plan is. So make sure you join us for that. And you can get the live stream link, the same way you got you're in today's session. So, we'll be prepared for each of these events. So that is not going to be a big deal at all. You'll be prepared for it. But for now, I'm bullish dollars. I'm bearish euros because okay, so I was really toying with euro. I'm kind of neutral bearish euros. I'm bearish euros because and we put this together shortly after the tariffs. I'm bearish euros because I think that the dollar will rise on the tariff threat, and euro area is the next focus for President Trump because he's already threatened tariffs on euro as well. But the tariffs have not happened yet. So, compared to the Canadian dollar, compared to the Mexican peso, compared to Aussie, for example, which is and yen, which are proxies for Asia, euro looks a little less bearish. Also, we've been seeing some better Eurozone data, including some of the PMIs last week, the PMIs this morning, along with the inflation report this week. All of that is bearish is more positive for the euro. So I'm kind of neutral bearish euros. Against the crosses, I'm more positive euro. Against the dollar, I'm bearish euros. I'm bearish sterling because I think, first of all, BOE is expected to cut interest rates. And also, this whole, tariff situation creates ongoing uncertainty. And the Bank of England will probably err on the side of caution in their language and suggest that we could still see more interest rate cuts. RBA, this is the one Aussie has fallen to its weakest level since 2020. And the reason why it's fallen to its weakest level since 2020 is because they were the only central bank next to the BOJ who did not cut interest rates last year. They will be cutting interest rates this year. And the tariff situation, the impact on China, could make the first rate cut by the RBA happen as early as this month, February, as early as February. And there's a very good chance of that. That's why I'm bearish Aussies. I'm obviously bearish Canada because they're at the center of this trade war. Canada, US, both basically hitting back at each other constantly. And I'm not sure that Canada is going to back down easily. And this poses the most serious risk to Canada in terms of growth and recession. So I'm very bearish Canadian dollars. And we've got the jobs report this week. We've got IVPMI this week. I'm definitely bearish Canadian dollars. New Zealand dollar, I'm neutral because there's New Zealand jobs report this week, which could be a little softer, but it's really going to trade on the market's risk appetite. I'm bearish Swiss francs because we've had a lot of weaker Swiss data, and I'm bullish the Japanese yen. The yen will probably be unwound. The yen carry trade will probably unwound the hardest off of any continuation on the sell-off in the stock market. But it can go either way, right? That's my point. If Trump comes in and he says that, we made a deal, or they're going to agree to something, or we're going to give them more time, that's going to reverse the rally and again lead to fill our gaps. And even if he says we had a good conversation, we saw this before, we had a good conversation, that could be enough to drive the gaps to be filled. But if, Mexico comes back and says we're coming back with tariffs and Trump says nothing, or Trump says we've given them the warning, then the sell-off could continue. What do you think is going to happen? If you think, I'm going to put my emojis. If you think that a deal is going to be made, give me the money face. If you think there's going to be no deal, and that we're going to end, that, Canada's not going to back down, the conversation's not going to go well, give me an angry face. Let me know what you think. So while you're giving me your feedback, let me know, where you stand. Another mutant asked a question: how can we rely on fundamentals in continuation if news are driving price levels? It's a very, very good question. My best advice for you is that let me backtrack. My best advice for you is to wait, because, whatever comes out of this is going to have a lasting impact. It's not as if you need to wait long. Yes, Trump can make a new announcement at any point in time. And that's why, if you watch my video on how to trade the chaotic Trump markets, which, I'll put into the stream right now, I tell you, keep your positions small, either keep your stops tight or keep them very wide. So either get out quickly if you have profits, or if you don't have profits, or keep your positions small so that you can ride any type of volatility. What I will be doing, hold on, I want to put this video in. What I will be doing for our traders is we're going to be getting in and out of trades quickly, unless we are in the direction of flow. We're not going to be carrying our positions for long. We're not going to be holding them overnight. We might be moving to break even faster. So we're going to be very, very on top of the positions. And we're only going to carry the positions overnight if we feel strongly about them, or we've locked in some profits and reduce our risk. So you do have to tread more cautiously. But at the same time, maybe after this call, we'll have some degree of certainty for 2 months, or for a month. We'll see. But that's also another reason why it's important to watch my videos every morning, and to join our live streams if you're a BK member, to stay on top of all this. So this is my view. And let's look at the data quickly for this week, on what to expect. So we already had a few pieces of data out. Australian retail sales was negative, not good news. It was less negative, but still not good news. Kaishan manufacturing activity was weaker in China. If not for the tariffs, the RBA probably could postpone their first interest rate cut until March or April. Now, depending upon how it all plays out, we still have to see. But if the tariffs stay...
Sorry, okay, I just want to cut in for a sec. Trump will speak to Trudeau 3 p.m. today, he says. So positive headline. Just watch out for that, okay?
What about with the Mexican?
Just one at a time. Right now, we're just dealing with Trudeau because Canada, I think.
I guess that makes sense. I mean, you can't have two people at a time. Yeah. Well, thank you for that information. So It won't be till later.
Yep.
So if not for the tariffs, if basically tariffs kick the can down the road, there's some sort of agreement, but we haven't heard anything from China yet, RBA could probably postpone. But if it is where it is right now, and China has to proceed with 10% tariffs, and they retaliate, then we're definitely getting a rate cut in February. Eurozone data wasn't that bad. German and the PMIs were revised higher. Eurozone inflation numbers are hotter. They're not going to be happy with this. Later this morning, we have ISM manufacturing data. So that's going to be important But of course, nothing's more important than Trump speaking with Trudeau at 3 p.m. The Canadians are royally pissed, and that conversation is not going to go well. I don't think no signs point to Trudeau backing down easily. And the question is, what does he really have to lose, right? Because he's stepping out of office. And so the only win is if, he makes Canada not seem as if they bowed down. I don't know how it's going to play out, but I think that there is a good possibility that that he's not going to relent easily. Tomorrow we have a bunch of Fed speak. That's not really going to be important. We don't have much in the way of U.S. data. Wednesday, though, is when things get a little bit more interesting. We have the ADP report. We have ISM services. So both of those will be very interesting and very market moving. But once again, we're all focused on how this tariff thing plays out. And then on Thursday, we have the BOE rate decision, 25 basis point rate cut expected from the Bank of England. We have IVPMI from Canada, which is expected to be weak. Like I said, I think the Canadian dollar will continue to fall. And we have German industrial production numbers. Then we have Canadian jobs report, which is already expected to be weaker. So, Canada's going to lose more jobs as a result of this. So the jobs report's already weaker. Canada really stands a risk of recession. But once again, it can go either way. Maybe some positive outcome will come out of it. And then we have non-farm payrolls, which we will be trading with you on Friday. Job growth in the U.S. is expected to be much weaker, 154,000 against 256,000. And, that will be, I think, a very market moving release. So I'm excited about trading that with you as well. All right. Questions for me. In terms of charts, if you join us late, I talked about how, we talked about the gaps in the market. We talked about how the gaps could be filled in a day, depending upon the headline. Now we know he's not speaking to Trudeau until 3 p.m. So we're just going to consolidate. It's going to be next day's candles that tell us whether we close or not. I don't think we're going to close unless some sort of breaking headline happens between now and then. We need a headline to close the gap. And we'll see, now it's not happening until 3 o'clock. But in general, euro is weak. It's, below, if you look at my moving average charts, it's below all of the major moving averages. Bank of England is poised to cut interest rates. But the technicals don't matter much, I think, right now. I think it's all about the headlines. That's going to determine the technicals. Because right now, all they say is that, we've had a sharp rally in the dollar followed by a pullback. But tomorrow, when we visit the charts, depending upon how things go, we might have more clarity. Any questions? Let's answer some questions. Well, I didn't know Boris asked a question, but he asked, will tariffs last for more than 30 days? Sounds like the majority of you think they last more than 30 days. Any other questions? So, volatility equals opportunity. And there may be no better opportunity to pass your prop trading challenge than these markets. And our friends at Apex are offering an amazing 80% off all of their where is it? Oh, I want to read this to you. Hold on. I forgot before I go into my spiel. I want to read this to you. I thought that this post from Nouriel Rubini, and I also want to show you this. I totally forgot about that. So I'm thankful some of you are still here. Before I read Nouriel Rubini's quote, here, I want to show you. Many of you did not trade during Trump's first term. And so during Trump's first term, the big focus was the trade war between the U.S. and China. And there were a lot of headlines that caused a lot of volatility. And this person, Infra, basically, put a lot of the headlines onto this Bloomberg screen. I thought it was really fantastic. So what we're looking at together is the Chinese yuan / the U.S. dollar exchange rate. So this was when, I wonder, can you see my mouse? Perfect. You can see my mouse. This was when the first tariffs were announced, exactly where my mouse is. I'm circling this so you can see a little movement here. So the first tariffs were announced on a small set, washing machines and solar. And then shortly thereafter, a big number, 60 billion tariffs were announced on China. And so this shows you that initially the Chinese yuan dropped, then it stabilized and it rebounded. And when the market realized that the trade war was serious, what ended up happening is that the Chinese yuan ended up selling off aggressively for two reasons. One, obviously, this is a big problem for China, and it means less trade with China, yada, yada. But the main reason why it fell was because these countries, or this country, China, started to offset the tariff by weakening the Chinese yuan. So they weakened the Chinese yuan in order to make Chinese goods cheaper to offset the tariffs. And China did say this yesterday or something like that they weren't going to weaken the yuan to make it happen again. But, that is a way out, I guess, for a lot of these countries. They're not going to like it, but keeping their currency weak helps to offset the tariffs. And this could be a strategy that we end up seeing. And this could be, basically what they use to protect their own economy. All of which means, from the tariff perspective and the possibility of weakening the currency in order to offset the tariff, means that the Canadian dollar, the Mexican peso, the Chinese yuan are probably going to move lower. Now, the question for us is, okay, so this is in, tariffs were announced in around January 2018. How did this impact the major currencies that we trade? Let's look. Remove all our indicators. Now, the only one that really, Aussie and probably dollar yen were the only ones that could potentially be affected. So we can see that when the tariffs, and these are monthly charts. So remember, there's a lot of candles inside a monthly chart. So in the beginning, like we did see the yen strengthen a little bit. And the yen, so it strengthened all the way to April. And then the yen also weakened and the dollar strengthened. Aussie in 2018, because the Australian dollar is one of the greatest proxies for Asia. Where's 2018? Over here. Basically, one-way downtrend. So there was quite a significant impact on the Australian dollar and to some degree on the Japanese yen as well. So I want to share that information with you because this is many of you, maybe the first time you're seeing how a chart showing you what the first trade war created by Trump, how it had an impact on currencies. Actually, how did it impact on stocks? Let's see. Because many of you trade NASDAQ or Boris. 2018, right here. Did not really matter at all. We did have quite two candles, February, March, quite a bit of volatility. This definitely is a volatile session. But at the end of the day, the market's kind of recovered. Rubini, I was reading this. I want to share this with you. He said, as I clearly wrote and predicted late last year, market discipline would punish swiftly and sharply Trump's policies, like high tariffs, which caused high inflation and lower growth. Indeed, both bond and stock vigilantes woke up over the weekend as Trump unleashed the tariffs. Let's fast forward to this. Stock futures are down sharply, which initially long rates rose. The slight retracing in bond yields on Sunday is driven by safe haven bid as stocks are crashing. This is the part here. But over time, tariffs that increase inflation will lead to higher yields as inflation and its expectations rise, unless the tariff shock slows down growth and causes recession. But this is the number one thing here. This is what I'm going to paste this into the chat box because this is what I found the most interesting. YouTube rejected your comment. They think it's spam. All right, fine. He says, we will now see if Trump's economic advisors, such as Besant, have influence and are willing and able to put some reason into Trump's mind and force him to partly relent over dangerous and front-loaded policies that are stagflationary, or whether Trump, like Emperor Nero, will stubbornly double down and burn Rome, i.e. DC and America and the world to the ground. So I thought this was a very, very clear point. And he says, I also argue that in due time, market discipline discipline should restrain his worst stagflationary instincts, as both asset prices and the real economy will crash more. We shall see. The good, the bad, and the ugly from Nouriel Roubini. But I think this is the point. Will Besant and those who are of sounder mind be able to force him to relent? Or will he be like Emperor Nero and burn down, double down and burn down Rome? That's basically the real question at hand. All right. So Boris posted. So as I said, volatility equals opportunity. Our friends at Apex are offering the most amazing deal that expires on Wednesday. 80% off any size evaluations. They've even made their $150, $250, and $300,000 challenges all basically, worth the same amount. I think it costs only $59.40 for a $300,000 challenge. So it's quite impressive. I'm going to share this with you right here. So, make sure you take advantage of that if you are looking to pass your prop, because once again, volatility equals opportunity. So any other questions? Okay, we have one question from Bernardo. You cover forex and futures analysis. Yes, it's all related. I talk about stocks. I talk about currencies. Boris will talk about forex and futures and gold in just a minute. He's going to be trading with all of you in just a minute. So yes, we do talk about all of it. Is there a good news aggregate site to subscribe to for the next 4 years? I don't think you need to pay for anything, Ryan. I think that if you have, maybe you don't want to pay. I think Financial Juice is the best. I think they're the most comprehensive. I'm sure they have a premium version, but the free version is just as good, in my opinion. Financial Juice on X. Any other questions? Let's see if I'm missing anything. Hello, Boris. Boris will explain open as all retail open, sell hits the flow later. But otherwise, it sounds like you don't have any further questions. Like I said, we're going to be live trading non-farm payrolls on Friday. If you're a trading prop, take advantage of this amazing deal for our friends at Apex before it expires. They've actually been more conservative with their deals lately. They haven't been doing it every single month. So it's been like 3 months since they've had this deal. So I don't know when it's going to come back. So definitely grab them when you can. Otherwise, a lot will happen at 3 o'clock. And so, make sure, you follow our various social channels, and we'll do our best to try to keep you all updated. All right, my friends, have a great day. Yes, Apex is only futures, but we also think Capital, is also a company that we work with. And, I like them a lot because they're broker backed. I think their deal is gone. But, I'll post a link later on. We have a 10% exclusive discount with them that you may find.
We're gonna have a CFD prop firm partner that you're gonna love coming up also. So in just a couple of days, I'll be happy to give you also a broker back firm, tremendous amount of multiple instruments to trade.
Don't you have the link now, or?
I don't have the link now yet.
Okay, I have the link. I'll get it to you guys.
Okay. Hi guys, how's everybody doing? Good morning. So much to talk about today. I posted yesterday. Let me share my screen for a second here. Let's make sure we get on the right side. Okay, here we go. Excuse me. You know what I want to do? Here we go. Let me go over here. Let me just do a few things here with you guys. There we go. All right. Make sure, put the QR code in, get the 80% off. As I was saying to you guys, they haven't done this in a long time. So to lock in the accounts now, it's going to be so easy to hit 1 or 2 trades and essentially pass the evals in this volatility. This vol is crazy. All you got to do is just be right on a couple of trades here. You can hit it really, really hard. And with the new indicator that I just put out over the weekend, the new version of BK Scalper, it's going to be much easier than ever for us to do this. I actually put out a little video for everybody. I'm going to post the video right now. Let me see if I can do this right now. You can watch the explanation of the scalper over here, because it's quite a significant piece of software. It does a lot of really, really cool stuff. But you watch me trade it, you'll get a really good idea of all the things that it's doing. I'm actually keeping it super simple today. We're opening up 9:30, first sell signal of the day. We're not going to take it because it's too volatile. One of the things you're going to notice over here is I have a brand new built dashboard to help you watch the volatility. One of the key things about volatility over here is ATR is at around 20 points. That means every single candle is like a 20-point candle. That's a lot of risk for us, per contract as we're scalping. So we're going to just give the first 5-10 minutes of the day to consolidate itself so that the ATR comes down. We don't have to trade such volatile candles. What this is basically telling you is if your stop is less than 20 points, which is a $40 stop on a single micro contract, or a $400 stop on a large contract, you're probably going to get stopped out on volatility. So we'll watch for a little bit more muted trades as the day progresses. But there's so much richness in everything that I put out there to help you not only find the signals, all of these signals over here on both the sell and the buy side, but also to analyze if those signals are quality signals or just mediocre. I'm going to get a little bigger here because I want everybody to see this a lot better. The interesting thing is, ironically enough, all the really great trades were Asia Open, right? I mean, Asia Open, there was 100-point moves in a matter of minutes. I don't know how you guys did. I had a great time scalping away. Now we really compressed. First of all, the moving averages are right next to each other. That's a clear sign of compression of volatility. And two, you see the buys and the sells are basically on either side of the trade. There's not much directionality going on right now either way. So we'll watch out. I think it's indicative of the fact that we obviously have a huge amount of indecision. So a couple of interesting things. I'm going to give you a little bit of an opposite point of view because I think it's important to always listen to everybody's opinions and then make up your own mind. First of all, the very fact that most of you think that the tariffs are going to last more than 30 days is a good sign to think that they won't. One of the most humbling, things you can do in the market is to understand that if you're with the crowd, you're probably wrong. And I think that's a pretty much a conventional view now. Secondly, I also think that, guys like the Rubini are very interesting, but literally have been wrong every single day of their life since 2008. So I take everything they say almost as an opposite signal. The very fact that he's super bearish makes me think that this is going to be possibly a non-event economically. I could be 100% wrong. His reasons are legitimate. He's spelling out conventional wisdom. But of course, as we know, we don't live in conventional times, and certainly Trump is not a conventional president. So I take everything, again, with a great deal of skepticism as to whether this is really how things will play themselves out as we go forward. All of this is to say, when I posted this a little bit earlier on Twitter, I said 21,000 NQ is the Maginot line, right? 21,000, we're at 21,200, and very likely to be tested at the open as all the retail open flow sell hits the flow. I was wrong about that. It seems to be very little retail sell flow. Whatever happened already hit the flow. After that, it all depends on silence. The more silence we have, the more likely we're going to go lower. But if anyone at the White House says anything even remotely enthusiastic, we could get a short squeeze, which I think is really going to be the case. Unfortunately, though, it doesn't look like we're not going to get any kind of White House headline event until the end of the day. He starts speaking to Trudeau at 3. Even if they start leaking stuff like at 3:30, 3:45, it's only then that you're going to get, possibly a big movement. So I'm just watching the comments here. So we could be just churning away. This is, ironically enough, we need to be very careful here because as we're watching the price action, it's certainly not definitive, right? We're seeing very little trend action. It's all really compressed around mild bid to the upside right now, but no real indication that we have any good clues. We can switch to gold, which is much stronger and actually much better. Now, gold is interesting because I think, first of all, gold is getting a bit as a safe haven trade, but also maybe gold is kind of anticipating that the risk is going to be more muted here. Gold certainly has. I haven't, frankly, I am guilty of not trading gold this morning, but gold gave us, look at these signals, long here, long here, long here, all just golden signals. We are in super trend in gold. The slope is positive. ATR is reasonable at a dollar. 1 point is a dollar in gold. All of these things are really, really positive for a upside in gold. Unfortunately, it's running, so we don't really have any potential trades here, and it's already kind of very, very mature in its move. We had 3 consecutive winning trades here, 1, 2, 3. So we'll have to be patient, see if we can get the 4th trade over here. But it's already looks to me a little tired here. Regardless, that's really been a really, really good instrument. S&P is actually looking a little better than the NASDAQ. Had a more positive pop. Let's see what S&P is showing us right now. Just have to wait a little bit because the trading view is always really slow at the open, right? It's just really, really slow to paint the chart. So we just have to be very, very patient with it. There we go. And it looked a lot more bullish than I thought. Oops, hang on a second, guys. Sorry. All right, we'll see. Yeah, if the S&P gives us a bullish signal, that's actually a legit bullish signal here. Let's see what NASDAQ is doing. NASDAQ also popped a little bit here. Generally, I want to kind of walk you through my thought pattern on all of this. I'm trading the 150, $150,000 account. It's very easy to trade the minis on there. You have like a $5,000 drawdown. So, even if you get clipped for 20, 30 points on the mini, it's $300, $400 losses, $500 losses, even $1,000 losses doesn't even come close to hitting your drawdowns. And of course, it's really lucrative. Like when you hit them hard, you hit 2 or 3 trades in a row at $200-$300 winner, you're almost at $1,000 in 3 or 4 trades, which is a good way of doing it. But if you want to be a little bit more circumspect, one interesting idea that I've just been playing around with this whole morning just to see how well I can do, and it's working pretty well, is I'm actually trading two small NQs, which is about a $40-$50 profit for me on these $10 in, $10 out trades. Obviously, trading the micros gives me this incredible amount of power and leverage to go larger. Remember, if I get stopped, I go twice as large. If I get stopped again, I go twice as large again. I give myself 4 chances. Usually, with this setup right now, I haven't had a chance. I haven't had the need to give myself more than 3 chances to recover. And the way it works, if you think about this, you lose 1, win 2, lose 1, win 2, lose 1, win 2. That's where you make the P&L just keeps growing. So if you're looking sort of mathematically, if you're trying to hunt $50 wins, right? For $1,000 a day, because it's $9,000 to get myself funded on the 150. It's completely viable, especially if you're trading during market hours. It's a lot. I mean, $50 a trade, you need about 20 trades, but you're going to be doing 3 to 4 trades an hour generally. As they will resolve, and 3 or 4 hours. Maybe you won't quite make 1,000, but you certainly on small contracts have a reasonable chance to do 500 to 700. Whatever it is, it really gives you huge margin of error to be able to get funded within a month in a super reasonable way. So my approach is slow and low, but you can do it large and in charge. You can certainly do large and in charge and just hit it with a couple of large contracts. As a matter of fact, I was watching this video. I think Apex still allows this. I don't want to speak out of turn because I got to talk to them today just to make sure. But I think they still allow like single trade funding. In other words, then the consistency rule only applies to funded accounts. Correct me if I'm wrong, guys, in chat. But when you have these big volatility days, all you need, you could just literally, especially when you have, and I'll show you, when you have a good setup, setting up. like a nice green candle, positive slope. You're in trend. Tammy's telling me, or somebody else, 20 trades telling me that is correct. So you can go max contract, like 10 contracts. All you need is 17 points. 17 points in this kind of volatility is one candle, and boom, you're funded. It's a fun thing to do. It's absolutely not how you're going to trade in real life. So I encourage it if you want to get funded quickly. I discourage it if you kind of want to learn how to trade your funded account well. I am the type of person that likes to be consistent, in all my approaches. So I'm much happier just trading my eval the way I trade my funded, in a very proper risk reward ratio. And if it takes me 10 days, 15 days to get funded, great. All the more so because that's going to that template is going to work very well on the funded side as well. But in this kind of volatility, it is very tempting. Like there are certain setups you can easily see and go, it's definitely going up, going high. This is not one of them, by the way. But you can see, we're seeing a lot of power. They're starting to buy it up. This is probably a pretty good time to come in with 10 large for a 20, 30 point target, and boom, you're funded on a $50,000 account. So a lot of really interesting possibilities here. Do I recommend the same approach for CFD DNA funded? No, because they don't. They're much. First of all, they don't give you nearly as much leverage. DNA funded is really great for traders who don't have to scalp like jacked up rabbits like we are, who can actually. The great thing about DNA funded, I just did a review of them. We'll post a video soon. Is that you can actually do much more swing like positions. You can hold trades for days on end, get funded that way. You can trade hard, you can trade fast, but it really gives you, because DNA funded lets you hold positions over the weekend. You can really do some nice clean swing trades on it. So very different approach. I think it's much more beginner friendly over there, and I like it very much. Apex is like Formula One racing. You're juiced up on leverage, and you're juiced up on futures, and it's fun. But we all crash into the wall at least 1,000 times a day, right? So that's how it plays out. Watching this is actually interesting. We're going. Look at this. You guys see this, by the way. You see how this is dynamically changing. We're in super trend territory. Only to now create a counter trend signal for a second. It's really wild. I'm watching the price action. By the way, are you guys enjoying how all of these dynamic signals are showing up, how everything is changing? I love this. Now, what's really cool here is this is a counter trend signal, but the slope is positive. So not exactly, a confirmatory trade here. Not something that I would want to do. Even on a small contract, it's just not a trade I really want to do. I actually think, looks like we're going to go higher here. It really feels like the market is what am I, NASDAQ? I want to go small. Because I'm trading smaller contracts now. It really feels like the market feeling a little bullish. This is not a signal trade, but I'm just going to have fun with this. I'm going to take a buy here. Probably going to look at this, and I hit it right into the sell zone. Doesn't matter if this doesn't work, we'll flip it around. But here's my idea. I'm right underneath here. Oh, look at this. It really faked me out. Okay, I eat my impulse here. The thing is, though, you see how tight and small a stop I have here. It's just a tiny little stop here, right? So if it doesn't work, it doesn't work. I'll get clipped for just a little. How much time is it? 22 seconds left. Wow, it's really reversed. That's interesting. All right, let's try this. I'm going to wait till this candle holds. Oh. Really, the one thing I think nobody expected was a choppy market, but we're certainly getting a little bit of a choppy market here. Okay, reversal signal. Let's go here. I just missed the retrace. All right, let's see if I can capture some of this back. Boom. Capture some of this back for now. That's fine. So I didn't even double up on this trade. It was the same size trade and probably would have worked more. I just, because I made the wrong trade the first time, I just wanted to even myself out on the position because I'm trying it hard. I'm like $400 to my $1,000 target today. I want to just keep growing it until I get up to that level. So I'll let you guys know how this is trading. But this was a good reversal signal. Wow, look at that. Really, really big reversal signal. Okay, something hit the wires. Until Ontario rips up $100 million Starlink contract in response to Trump's trade war chaos, blah, blah, blah. No, I thought there was something else new. Nope, nothing specific on the wires here. Just watching what's going on here. Mexican Finman, Mexico's in good position to navigate global challenges, blah, blah, blah. No, nothing. All right. So we just basically completely reversed. The reversal signal was super good. Really caught it hard here. Any of you guys take it? There's so much confusion. Maybe traders should expect choppiness. Yeah, I mean, I think it's natural. I think everybody thought we're going to have big movement on the Open, but I think we had the big movement on the Asia Open, and now the U.S. Open is just trying to assess where things are. I still think, honestly, absent any news, the path of least resistance is to the downside. But let's see how it trades out. It's not clear at all. Where's gold? What's gold doing? Well, gold is just soaring. Oh man, we should have just been trading gold. I'm sorry. I should have focused on gold here. Look at this. Gold has just been nothing but buy signals all the way out. It's just skyrocketing. Alas, we missed that one because the equities are just choppy as AF. But we did make the money back on that trade. Interesting. Cheryl, you took that trade to the reverse side. 20 trades got it too. That's good. That's good. I'm just trying to, I wish we could find a trend like we do in gold. Right now, it just seems the equities are doing nothing. They're totally floating around. We have a lot of events this week that are economic, but as usual, Trump completely trumps everything, and he has been, very likely the Trump tariff story is going to trump whatever economic news there is. So we have to see. Yeah. Always pay attention to an asset that's making all-time highs. This should have been a real look for us. I just put on the extreme overlay. Oh, let me put the links in here, guys. Okay, a couple of links. If you want the overlay indicators, which are like the extreme breakout indicators and the extreme trend, those are free, and I'll just put those out there. This is the extreme overlay, and this is the trend. If you want to get the scalper, which I absolutely love, now I just put in a discount link over here. You can simply join us, or you can join me tomorrow at Pass the Prop, and you're going to get that for 3 months for free. Wow, what a move. Gold is just flying. That's painful. Painful to have missed it. But the beauty of scalper is there'll always be another opportunity. But look at how many beautiful signals there are today in gold. That's the other thing I was going to say to you. Honestly, the single most important thing, scalper is awesome, but really the single most important thing is just to find yourself in a strong flow trend. If you get a strong flow trend, scalper will make money for you naturally, right? Just naturally. It's just that NASDAQ now is just chop city. So is S&P. The S&P just turned negative. We can probably trade the S&P negative. I'm going to sell this just to see if we all right. I'm going to sell this against the stop over here. See if I can get it down a little bit. I see a little bit of selling pressure here on the S&P. This is a pretty small contract, so we'll let it play out. But this was the sell signal over here, but not a lot of continuity off this breakdown. So I guess maybe we're going to be just chop city. It may torture me a little bit today, but these are all small trades for me against the $150,000 account. So, and if we flip around positive, I will flip around positive with it as long as I get the signal. Frankly, we're just chopping. This is nothing. Wow, what is it? 1050? Nothing much going on. Yeah. It's the irony of all surprises is that the open has been a complete dud, right? Probably in about half an hour, we're going to get some movement. Oh, we got a positive move here, but it's a negative slope. So that's interesting. So this is a signal I would not take until the slope turns positive, and it's a pretty negative slope here. So and you can see how you see why that dashboard is kind of helpful for you as a guidepost, right? And we're going negative, and I'm going to take it here. Beautiful. All right. So it took, it tested our patience, but that blew me up a little bit, and I took about 75. Should have taken about $100, but I think I took 75 out of it, which is good. Now, I mean, this is a big candle here, so this is like a six points of volatility. It's still too much volatility for S&P. I only want to have like 3 or 4 points of volatility in the S&P. This is not a candle I want to follow. I'll wait patiently. If there's a true sell-off in the S&P, like for 30, 40 points, there'll be at least 3 or 4 more entries along the way on the path. I've learned to pace myself on all these things. On the other hand, with NASDAQ, we can trade small. And what do we got here? How much? 36, 37 seconds. This is a breakdown candle. This is the extreme sell-off candle against the sell-off. Wow, it's going away. So it's not a signal. Slope is negative. Big ATR though, 32 points on ATR. It's a lot. But I'm trading a micro, so I will dive into the mouth of the dragon. All right, so against pretty much the stop only over here, and then we're going to go see if we can target this over here, just a short target. Let's see if I get a little bit of continuity. Probably not. NASDAQ is just going to be doing the up and down yank job that it does. Let's see. Yeah, we'll see. My stop is right above that candle, natural stop. You see the most important innovation that we did last week, which was to not create cookie cutter stops and cookie cutter risks, but to create natural organic stops that are through the market. Either they work or they don't, and it's much easier for us to reverse and recover off these natural stops, which are typically pretty small, much smaller risks. Nope, we didn't. We ain't moving. We're going the other way. All right, we'll see. See a lot of volatility, right? So that's why trading small size. Look at this, 29, 30 points of ATR here. So if you're trading large size, that's almost $1,000 contract. It's $600 worth of volatility. Not worth it. Are the alerts working on the indicators? I'm not, guys. Those are free indicators. So I think I made the alerts work. The alerts are definitely working on Scalper. So those are the alerts that are made there. What BK Save says the code expired on Apex? Really? I don't think so. Is anybody else having an issue on that? Just use the word BK Save as code. Oh, we got stopped out. I'll take a look. Solar Punk. All right, this is a rare reversal signal, which is kind of, again, worth for us to have fun with, because I'm going to trade small here. 31 seconds left. But look at the volatility. It's a big vol move, but I'm still going to take it. I just want to make sure it stays. I don't get fooled into taking it. This is the kind of, we had wow, we're going the other way now. It's really stretching out. A lot of vol that I'm going to have to assume on this trade, but it's fine. Let's take it. Let's have fun with it. All right, I'm in this trade. I have to go all the way down here on this move. Let's see how much we can get over here. Let's see if we can extend into the 50s, maybe. Come back down a little bit. Let's see. Come on, reach to me, reach to me, reach to me, reach to me. Let's go, baby. Yeah, there we go. All right, so that was good. Again, I'm trading super small, guys. And actually, I could have taken more because, I'm just being a pussy. So this is two starting. Second was just 4. This is micros. This is just micros. It was basically $1.50 off of micros in a minute. $1.50 a minute. Obviously this is not realistic. But $1.50 a minute means, and you have like 10 trades in 2 hours. It's $1,000 for 2 hours. It's not going to happen. Because you don't get those trades, continuously. But my point being is, like, just sort of, realistically, let me show you. Okay, let me just sort of show you where I'm at, because this will give you a good guideline. See this account. So I started today 150. It's 152, effectively 700. And just trading small between taking my daughter to school and making cappuccino and walking the dogs and all the other shit. Trading small was just the absolute key here, because I wasn't trading large. I didn't have these massive wide swings. I think if you look at my today, and it's just today and tomorrow, you see the swings were not $1.37. Those are really pretty small swings, right? Really small swings on up and down. It's just, my point is that with this approach where you're using relatively tight, and relatively tight is of course dependent. This was a big ass candle. You saw the ATR is 33, right? I took it because I thought, oh, this is a reversal, looks pretty strong. Let me take a shot at it. And even if I was, even if I've still been in the trade, like I got myself out, even if I've still been in the trade, I'm not stopped out because the stop is underneath here. And if the market kind of holds and reverses, it's, it'll probably work for me. But regardless, you can, at every single point on the chart, you know exactly where your volatility is. You know exactly where your risks are. You know exactly what kind of size you're playing with. And I think playing with a smaller size, obviously against this type of a market environment, gives you so much more confidence, because you can go 1, 2, 4, 8 on the micros, not even come close to any kind of a significant drawdown, and resolve all this stuff and just keep building it. I'm trying to build it basically $100, $100 per tranche. So I want to do 153 by the end of the day. I'm at 153.700 without really much effort, and also fucking up a couple of times. And also, oh, I forgot to tell you, I opened last night and took a big contract. Ooh, look, big sell-off here. We're going, what happened here? Big sell-off. Anything on the news? 10 o'clock. Is there news on the market? Let's see if there's Some calendar. Auction, nothing, no. Oh, ISM manufacturing 10 right now. Hot. Prices hot. Prices are hot. Oh shit. Look at this. 54 against 52. That's a hot fucking print. Ugh, that's why it puked a little bit. Interesting. So, this is all obviously market fearing that we have inflation. Here's the thing. And it may take a couple of days to play this out. Like I said, we should short the shit out of this thing. This is a pretty good sell. I just need size here. I got to come down on size here. 2. So, okay. All right. I'm short against this second candle over here. Let's see if this works. A lot of volatility. I mean, this is a pretty negative print, but they did buy it up. So there's not a lot of continuity. I may have to eat this trade, but it's a reasonable trade. I have a sell signal. Market is negative. All right, let's take 30. Good enough. All right, now I'm above 700. You see what I mean? I'm clipping tiny little pieces at two micros, but it's giving me, a signal every 5-10 minutes. So I'm at the trade and I'm just clipping it. $50 every 5 minutes is $500 an hour with very little stress on your account. I just think that that's a better way of doing it than going in large with a large contract. Because yes, this could have been a $350 clip, but it also would have been a $500 loss if I was on the other end of it. I just didn't. I don't need the headache right now. But you see how it was all very cool organically. You had the signal. You had the when I have these big volatility signals, I'm always going to go second candle to the stop, and the trade was pretty much done. Now everybody fucking wakes up to the idea. Oh my God, we have embedded inflation and we get tariffs. So I was going to say I didn't get a chance to sort of complete my thought, but that's a very net negative idea here. And yes, does this event right now could this drive us to a new downtrend for the rest of the day? Possible. Like right now, we could be watching this. Once we get into super trend on the red side, we could be selling off all the way through 21,000. So I got to go soon, but it's totally viable that we could be at 21,000 or below if the day continues off this negative news until Trump comes on and says, "Oh, I was just kidding. We're good to go with the Canadians." I don't think they're going to do that though. I think everybody's pissed too much to negotiate a deal quickly. Although Trudeau really needs to make a deal, so we'll see. This is all a short way of saying that nothing is clear today, and there's no clear definitive moves here. But it was good to react to the price action and get a little bit of money done. John is asking me, he hasn't traded props yet. Do they have spreads? No, John, they don't have spreads. We're trading, when you trade futures, you're trading actual stock. Hang on a second. Where are you guys? There's a question. I'll put this up. The difference between trading futures like we do with Apex versus, by the way, anybody want to confirm to me that Apex, our link is working? I just want to make sure the code is working. Anybody used it? Give me a yes in chat, because I'm talking to the Apex folks in an hour. I want to make sure that it's all working. So what I was going to say is no. When you're trading Chicago Mercantile Exchange, you can actually make bid ask. You can go into DOM and you can trade. You can buy the bid, sell the ask. I don't bother because I don't really care. So I'm paying spread on the entry, but I'm exiting on the offer if I'm selling, or exiting on the bid if I'm buying. So I save the spread on one end of my transaction because I'm limit bid or limit offer on one of them. But that is the great advantage of futures, is that you can make spread if you wanted to. You can make bid ask spread, and obviously it's very, very tight in futures. MB is saying didn't work for you yesterday. Shit. Okay, guys, I will So the word BK save just did not work as a like when you inputted the word BK save. Let's go. You know what? Okay, now this is gonna drive me. I'm gonna show you how to do this. Let's make sure everybody's doing it correctly. Hang on a second. I'm gonna log in as myself right now. I'm gonna log in as myself. I'm not gonna buy just because it doesn't behoove anybody. But let's say I'm gonna buy a trade of 50,000. Okay. So what you want to do is you want to do BK save right in here. That's all you want to do. Blah blah blah. I'm gonna check. I'm gonna take you all the way to the checkout counter, and if I take it to the checkout counter, it should give me. What am I missing? Am I missing? Oh, data disclaimer. Okay. Okay. Next. What am I missing? Oh, maybe is their website down? No. They were saying something is wrong with the website. What's going on here? Huh. I don't know if it's us. Is this what's happening to you guys? Oh, coupon code expired. Oh, you're right. I'm sorry. Wow, you're right. Coupon code expired. Wow, that's weird. I don't know why that happened. Okay, I will get this fixed right away, guys. I will get it fixed right away because I'm talking to these guys in an hour. I don't know what happened here. So we will. Oh, you're right. Wow. What the fuck? That should be a permanent code. All right. You guys are absolutely right. I will get this fixed and I'll let you guys know. Otherwise, 3 yards in a cloud of dust. We made a little bit of money, and now we're just back to hanging in there. How's gold? I was like, oh, gold. Look at that sell signal on gold. I was waiting for that reversal signal on gold right here. That would have been a nice, clean reversal signal. Would have been really, really good. Look how good the indicator is, though, guys. Look how massively accurate and clean it is now. I really cleaned it up over the weekend. It's so on point, both on trend and counter trend these days. I love it. I love it. I literally am not going to change it. It is going to. I'm just going to leave it alone and work on other things right now because there's just not much to do. There's not much to do when you have perfection at your fingertips. It's such a good indicator. Okay, guys, I will try to figure out what the hell's going on with the BK save code. We might have to get a new code because I don't know what the fuck. I think they were putting on their server that something was happening with the login issues, and maybe may have had an impact on everything else that's coming in. So I'll let you guys know on what the code is if the code gets updated, or I'll have them just updated on the back end. But it should definitely be working before the end of the day. So be sure, get some accounts. Be sure just to save now code that works. Yeah. Okay. Yeah, but it's got to be our code because it's got to be off of our link. Okay. All right, guys. Thanks a lot. A lot of fun. New indicator worked like a charm today. Even with me fucking around a little bit, it still worked out great. I will let you guys know. I'm hoping I want to get to 153 by tomorrow. Okay. 80% off, not 8% off, my friend. 80% off, not 8. Solar Punk. Okay. All right, Solar Punk. Thanks. You gave it correcting my typing. Okay. Yeah. So have I. All right, guys. See you tomorrow. Should have a really good time. Enjoy everything. Enjoy the freebies. Come join us if you want the full indicator, and we'll keep on trading. This is going to be a great week. Lots of volatility, even though not much right now. But I guarantee you, before the end of the day, this shit is going to fly, and there'll be still even within this kind of a choppy opportunity, there's still trades to be made, right? Using our structure, which is really nice. Okay, I got to run. Everybody have a great day. I'll see you a little bit later. Take care.